Happy Monday, traders, and welcome to a new week in markets. On Sunday nights, a lot of the times we get, Trump posting something, to get markets to pump up and to start well on a Monday. And so overnight he did not disappoint. So last night he posted on Truth Social that the tariff policy was a fantastic policy, that it was making trillions of dollars for the US, that the economy is absolutely on fire, that the stock markets are at record highs, that inflation is low, and that also that they will be paying big portions of the US recorded debt off. And the big kicker though is that he would be giving a $2,000 dividend to the people from the tariff revenues. So that was big, the $2,000 stimulus that is going to go to the people. Last time that happened was during COVID, when they got stimulus checks. What did the people do with that? They put it straight into crypto, and they put it straight into meme stocks, and those markets absolutely soared. So over the weekend and in the last week, Bitcoin and crypto has struggled. We've seen, Bitcoin, break 100,000, and most of the weekend it was sitting just above, 101,000. But after this tweet, we saw Bitcoin spike straight up to 105,000. But look, this policy is pretty light in details. So we've got no idea exactly when this $2,000 dividend goes to the people, and exactly how it gets to them, whether it is actually a check or whether or not it comes via tax relief or something like that. So at the moment, yes, we're just getting teased with a bit of a carrot, but obviously we need some more details. In any case, yes, the initial reaction so far has been positive for markets, and so far crypto markets. Now, the other thing that markets are going to be trading on at the moment is obviously the US government shutdown. It has now reached a record for government shutdowns. Market really hasn't traded this too much, but now that it has gone on for as long as it's gone on, it's starting to affect the economy. So potentially this could start weighing on markets. But we're getting some news that at the moment it looks like potentially there is going to be a vote by the government to do a bit of a band-aid reopen. So reopen 10% of the government, of essential services. We should hear that sort of resolution about that shortly. So look, that shouldn't excite markets too much, because 90% of the government is still shut down. It is just a band-aid. But look, eventually when I guess the US government does reopen, no doubt markets will like it and will spike higher. But at the moment, it's still a risk that it will weigh on markets, because it looks like it is still going to be a prolonged saga. One of the other things that market was trading last week was equity market valuation, especially tech companies. AI, are they too high? We saw Nvidia last week have a pretty ordinary week. It was actually down almost 9% for the week. So look, I think that theme certainly is not going to go away anytime soon. One of the things is that Nvidia does post third quarter earnings on the 19th of November. So that's next week. That's a week away. So I think that we'll probably get a bit more resolution to that question about equity market valuations then. And I'd be surprised if the market takes Nvidia back up to record highs, or pushing it even to new highs before that earnings release. But let's see. But Nvidia is the general. It is what has led markets, so need to watch how that trades this week. Just on the agenda, it's pretty light this week, but we do have a decent event risk, and that is US CPI. That's the monthly CPI for October. That's going to come out on Wednesday. Now, obviously, we have one Fed meeting before the end of the year in December. Last Fed meeting, Powell did not want to commit to a December cut. So CPI is going to be very central to this. So obviously, a lower than expected number, and the headline, of course, the expectations around 3%. Comes out below that, then obviously market's going to start to get pulled up about that December rate cut being probably more realistic. But if it comes out higher than expected, well, that's not going to be fun for markets at all. And I'll start looking at ruling out that rate cut in December. Markets love rate cuts. They hate it when they get taken away from them. So yes, Wednesday is gearing up as probably the biggest event risk for this week. And even though that the BLS that releases the data as part of the government, and the government shut down at the moment, that is still expected to be released. Other than that, it's pretty light this week, but there's some employment data coming out of Australia on Thursday, monthly employment. Last month, that actually ticked up to 4.5%. That's what got the market excited about more RBA rate cuts, but then the big spike in inflation put an end to that. But the expectations is that the unemployment rate will actually drop from 4.5% back down to 4.4%. So that sort of says that the employment market may be cooling, but it's not falling off a cliff, and so that'll obviously help the RBA to be firmly on hold. They've got one more meeting in December, no meeting in January, and the first meeting of the year is in February. So look, there's a little bit on, but the key takeaway at the moment is obviously that we'll see how market starts the week on Trump's sort of, I'd say, call it a mini pump, and with these dividend payments that are intended to come at some stage. Yeah, good luck with your trades. We'll catch back in with you shortly.